Hi, meet the Smith family. Like many of you, they live in a typical rural municipality in Newfoundland and Labrador. Every June, the Municipal Assessment Agency mails an assessment notice to the Smiths and all property owners in the municipality. The property value on the notice is used by the municipality to calculate the property tax for the next year. It is the value of the Smiths' property on January 1st of the year they received their notice. maa determines the property value based on the property's characteristics and the sales market. The municipal council then sets the mill tax rate. The municipality's total property value is used to set this rate. Council then sends a tax bill to all residents in the municipality. There is a relationship between your property assessment and the property taxes you pay. To better understand the relationship, let's look at the following scenario. Let's imagine that the total value of the property assessments in the town is $70 million. And let's assume that municipal council needs to collect $350,000 in property tax to operate for the year. This covers municipal expenses like roads, water and sewer, and emergency services. In this scenario, municipal council has determined that they need to collect $350,000 in property tax to operate for the year. They divide this amount into the $70 million total assessed value for the municipality. This equals 0.005, and that figure multiplied by 1,000 results in 5 mils or $5 per $1,000. Each property owner pays their fair share of taxes based on their assessed value. In our scenario and based on a rate of 5 mils, here's how the Smiths' tax bill was calculated. Let's picture that the Smiths' property was assessed at $80,000. Council multiplies that number by their tax rate of 0.005, 5 mils. This results in a tax bill of $400. An increase in property assessments does not necessarily mean property taxes will increase. Let's take a look at another scenario. The next year, maa determines that the total taxable assessments in the town increased from $70 million to $87,500,000. Council determines that for this year, they need to collect the same amount in property tax as they did the previous year, $350,000. To calculate their new mill tax rate is the same as before. $350,000 divided by $87,500,000 equals 0.004. Multiply that number by 1,000 results in 4 mils or $4 per $1,000. Now let's look at how Municipal Council calculates the Smiths' new tax bill for the current year. Let's imagine in this scenario that the value of the Smiths' property increased from $80,000 to $100,000. To calculate the Smiths' new tax bill, Council multiplies $100,000 by 0.004, 4 mils. The Smiths will be invoiced $400, the same as the previous year, although the value of their property increased by $20,000. When properties are revalued each year, the most important factor is not how much your assessed property value has increased or decreased, but how your assessed market value has changed within your municipality. Our professional team is committed to ensuring your property assessment is fair, accurate, and equitable. The Municipal Assessment Agency values your municipality. To learn more about the assessment process, visit us at www.maa.ca.